Now available on Tata Sky channel number 526.
Hello and welcome. You're watching Property Hotline with me, Kavita Krishnan, on Magicbricks Now, India's first property channel. We are answering tax-related questions today with Jayesh Kariya. Jayesh is a partner, International Tax and Regulatory at BSR and Associates. He joins me in our Mumbai studio. Jayesh, welcome to the show.
Good evening.
We have a whole host of questions lined up for you, and
Sure.
I'm told Meenu Mulani has already called in. Meenu, go on, tell us what's your question.
Hello.
Yes, Meenu?
Yeah, good evening. My one daughter, who's older, she is giving 50 lakhs to my younger daughter on loan
Okay.
to buy property. My older daughter, she's NRI, and the money she will be sending from there. Now, is there, and my younger daughter will repay on quarterly basis or half-yearly basis her money back. So is there any tax implication on either of them?
Tax implications for either of them. The one sister is giving a loan to the younger sister, but the older sister lives abroad. What do you say, Jayesh?
There are two angles, Kavita, here. One is the exchange control regulations, given that the elder daughter is NRI and her giving loan to the younger sister, whether it is permissible in the exchange control regulations. Clearly, today the exchange control regulations provides that a non-resident Indian can provide a loan to its relatives, which are being defined in the exchange control regulations. And there are certain conditions also, so it does not require any approval, provided the minimum maturity period of the loan is about a year and that there is no interest which is payable. So therefore,
Can you just break down minimum maturity period of the loan? What is that?
Yeah, when you say minimum maturity period means the repayment cannot be made prior to 1 year. So a repayment can be made only after 1 year. So that's the condition. And there is no interest that can be paid. Now coming back to, in a sense, whether this loan can be repaid, the answer is yes. The younger daughter can repay in installments, but after a year. Now coming to your point, ma'am, on the question of any tax benefit that are being available, the answer is clearly no, because there is no interest that is payable. And even the loan that is being taken by the younger sister is not a loan taken from the bank for purchase of a house property or any financial institution. So therefore, the deduction which is available under the income tax code 8IC up to 150,000 amongst various payments is also not available because the loan is taken from the relative. So in short, yes, this transaction is permissible under exchange control regulations, but there are no tax benefits that one could avail.
No tax benefits, but are there any tax implications? Will either have to pay, either of them have to pay any tax anywhere during the transaction or after the transaction?
Very good question, Kavita. There is no interest payable so therefore there is no any tax ramifications. Granting loan, again, for an interest-free is not a kind of a tax challenge from a tax standpoint. So therefore, to my mind, there is no ramification. But if the loan is waived, then maybe there could be tax ramifications. But since both are sister, then I think the law provides for the exclusions that even that waiver of the loan, i.e. in the form of a gift, also should not be any taxation in India.
So, Meenu, that's your answer there. They can go ahead with this. Your elder daughter can give a loan to your younger daughter. There are no tax deductions that they will be able to avail of. However, there is also no tax that they need to pay on this particular transaction. Right? Moving on, we have Anup, who's written in through email. Now, Anup says that he wants to avail a home loan to construct a new house. The property is in his mother's name. His parents are more than 60 years of age. Now, they don't have a regular source of income. He is the co-applicant for this home loan and he will be repaying it. So, he wants to know if there is a way for him to avail tax benefits on home loan that he is repaying. So, it's interesting here, Jayesh, he is a co-applicant, but the property is not in his name. Does he get to avail tax deduction?
Again, a very interesting question. And this is, I think, we often come across this situation. What the law clearly provides that the benefit of the interest payment on the home loan is available to the owner of the house and not to the co-applicant of the loan. So if Anup, you would like to claim the tax benefit, then first of all, you need to become the kind of a joint holder in the property that your mother is owning. And once you become a joint holder of the property, then the loan that you are, I would say, paying, that would be eligible also for a deduction under Section 8IC up to 150,000, provided the house is fully constructed and the income therefrom is chargeable to tax under the head income from house property. And the interest that you pay is also eligible for deduction up to 2 lakh, given that this home is self-occupying in a year kind of. So you need to first become the
So Jayesh,
joint
how
holder.
does he become the joint holder of the property? He's clearly said that the property is not in his name.
Right.
What can he do now?
His mother can, I would say, some part of the share in the property, and he becomes the joint owner. And that is how he can become, in essence, part ownership is gifted to him and he becomes a joint owner.
So you just
and there are no
create
tax
like a
ramifications.
gift deed, like
right,
that's
create
what
a
you're
gift deed to that extent, and then he becomes a joint owner.
Okay, so essentially you need to get your mother to sign a gift deed giving you part share of the property, then apply for that home loan as a co-applicant, in which case you can claim tax deduction. We now have a viewer who's called in. Rupinder has called in, I'm told. Rupinder, go on, tell us what's your question.
Sir, I had some flat in Mohali, Chandigarh, that I have sold in August 2015.
Okay.
And around 2.5 capital gain arise from this sale. And I have a plot purchased.
Sorry, Rupinder, you were not very clear there. Rupinder, you were not very clear there. You said you had property which you sold in August 2015.
Yeah.
Okay. And then how much did you sell this for?
16 lakhs, ma'am.
Okay, okay. Go on.
And I have purchased plot almost 1.5 years back.
Okay.
And I want to construct some part of this plot so as to gain from this capital gain. So I can save from this capital gain arise. So I want to know how much part payment, part construction I can do, because I am not able to construct full. So part construction I can do, or
Okay, you want to know how much percentage construction you can complete and thereby save capital gains, right? Capital gains tax.
Yeah, right. Yeah.
Okay. Jayesh, again, it's quite an interesting question. Capital gains tax, now that taxes your capital gains, it taxes the profit that you make. Can you equate that with the percentage of construction that you would do if you invest it?
A very interesting and unique question. Now, first of all, one need to look at that which code applies, because for the capital gain exemption, there are different codes that apply for claiming the exemption. And here, since it is a plot of land which is being sold, so therefore it is not a residential house. So there is one code called 554F, which says that if the sale consideration is invested in a property, residential property, and if it is a constructed, then within 3 years the construction should be completed, and the deduction or the benefit would be available to the extent of the consideration which is received from the sale of the plot and invested in the construction of the house would be eligible for the tax reduction against the capital gain on the sale of the land. Now, the law does not provide any kind of, I would say, guideline or any restrictions in terms of what is the area that needs to be constructed for your own home consumption. So therefore, Karinder, you can kind of what you call it as construct up to kind of a ground floor, or you can construct first floor, second floor, but provided that house should be completed within a period of 3 years, and what you construct should be a habitable residential house. So it should fit into the definition of a residential house to qualify for the benefit. Hope this answers your question.
Rupinder, so essentially what Jayesh is telling you here is that whatever profits you have made from the earlier sale, that profit has to be completely reinvested in this house that you're constructing. One. The second important thing is that you need to finish, you need to complete that construction, and that house needs to be habitable. So you need to be able to live in that house. Only then does the law accept that you have completely reinvested your capital gains. Right, Jayesh?
Kavita, you need not reinvest. The law says to the extent of investment that you made, you are entitled to the benefit. Like take an example, your sale consideration is 16 lakhs. So if you invest entire 16 lakhs, then the entire capital gain, like take an example, plot of land would have been taken for 2 lakhs.
Right.
and 16 lakh is a sale consideration. So the capital gain is 14 lakhs. And if the entire 16 lakh is invested in the construction of a house, then entire 14 lakh of capital gain would become exempt under section 54F for
So
repeat.
if he were to invest just 10 lakhs,
Right.
so he can claim deduction for that 10 lakhs, is what
Then
you're
it
saying.
will be proportionate.
That is exempt.
Then it will be proportionate in a sense that 10 lakhs would constitute about 60% of the consideration. So therefore, the 60% of the capital gain, i.e. 8,40,000 would be available as a tax reduction or capital gain exemption. That is how the formula works.
Right. So as much as you invest, you need to figure out, how much of it is part of your capital gains in percentage terms.
Right.
And that is essentially what you can claim exemption on. However, the house that you build needs to be in a condition which you can move into. It needs to be habitable.
Right.
That is also equally important because you're talking about a land here on which you're going to construct.
Absolutely.
Moving on, we have Sundar who's called in. Sundar, tell us what's your question.
Yeah, I'm Sundar. Hello, good evening. My question is, I have bought an apartment, a flat, 825 square feet in Chennai in 96 for 7 lakhs, and I have sold it last month for 49 lakhs. The issue is the registrar's office insisted on the guideline value being written in the sale deed as 80 lakhs. So my query is my whatever money I've got is 49 lakhs, and actual capital gains, if you take the indexation and all, could be coming to close to 30 lakhs. And do I require to pay tax or on the total amount of 80 lakhs, which is the guideline value as per the sale deed? That's my question. Thank you.
Jayesh, Sundar's question is what, it's quite a common question that we're getting from viewers across the country. There are cities where the guidance values have been revised to such an extent that, they have outstripped what the market is actually commanding, what the market price is. And in fact, I know of certain markets where sales have actually come to a halt because of this.
Absolutely.
What do you suggest Sundar does?
In fact, Kavita and Sundar, this is the, I would say, very burning point for not only the home buyers but also for the real estate developers, because this is a kind of a deeming fiction which has been introduced in the law for charging the capital gain that is arising from the sale of the property, which is i.e. called 50C of the Income Tax Code. What it says that if the sale consideration, when the sale consideration is lower than the guideline value or the stamp duty value as being determined by the stamped authorities, then the consideration will be regarded as 80 lakhs. So the deemed consideration becomes 80 lakhs, and 80 lakhs minus 7 lakhs would be regarded as a capital gain. So even though it is not an actual gain, but the home seller is required to pay tax on that differential, which is a kind of very harsh on the, I would say, the seller point of view. The law also says that if it can be demonstrated by the taxpayers to say that 49 lakhs is the real value or the fair market value, then he could, I would say, challenge the action of the officer of applying the code 50C. And in that case, the officer has an option to refer the matter to the valuation officer, which is an internal departmental valuer. And then the valuer, based on that, works out what is the value. And if the value comes out to say exactly 49 lakhs or 50 lakhs, then the capital gain would be on 49 or 50 lakhs. But if the value is determined somewhere anywhere between 49 and 80 lakhs, then I think that will become the final. And that's the unfortunate part of the life, that the tax would need to be paid on the notional gain.
So you're saying that he can challenge it, but even if he challenges it, it's really going to serve no purpose.
I would not say it will not serve the purpose, but certainly when the valuation would need to be done, certainly information would be sought for, and the justification also would need to be provided that why the guidelines valuation should not be applied or why the property valuation should not be as per the guidelines, because each property is different and guideline value is based on the certain area. And maybe your property may not have the kind of, I would say, in the same benefit in the entire area kind of thing, in terms of the view, in terms of the kind of a landscape, in terms of the, I would say, surroundings, in terms of whether amenities are available.
No, but
so you can differentiate your
what
product.
Are the chances that, Sundar I mean, clearly Sundar is not in the wrong over here.
Right,
he just
absolutely.
Is saying that this is not what I got.
Right.
And I have made far lesser gains
Right.
than what you are saying.
Right.
So how can he get his point across to tax authorities and pay the tax that he's supposed to be paying and not, much more?
Right, Kavita, but as I said that this is, if you look at the law of income tax, it goes on the taxation on the real income, but there are certain provisions where the notional income is also being taxed. And this is one of the provision whereby the notional income is getting taxed.
So essentially you're saying that there is nothing he can do. There is
He
no
can
scope
challenge
for redressal.
and he can fight for that. There's nothing much can be done
How
about
many people have got any success in doing that?
In the past, yes. Of late, we have not seen so many people challenging, but in the past, yes, there are, I would say, references that have been made, and people have succeeded in those cases. But on a scale of 1 to 10, one way to say, then I think it is not more than 5, kind of. So
not more than 5. This sounds like daylight robbery to me. Sundar, it's a decision that you need to...
Yeah, but that's what the reality of the life.
That's the reality of the... That's the law of the land. You need to take a call, Sundar, whether you want to challenge it, whether you want to, go to the tax authorities and tell them that this is wrong. But net, you will probably end up paying the tax, is what Jayesh says. So be prepared for it. We also have Mohammad Hidayef, who's on the phone line. Go and tell us what's your question. Hidayef, can you hear me?
Yeah, I can hear you. Hi, Kavita.
Hi. Can you do me a favor? Can you mute your television set? Because there will be too much of disturbance and we won't be able to hear each other otherwise.
Yeah, I've already muted. Thank you. Sorry, I've already muted. Now, I've got a question. I've invested in a property in Bangalore in 2012.
Okay.
June 2012. And apparently, the building has slowed down the construction. And now it is getting completed. If I have to sell this apartment, can I get some waiver in the capital gains tax? I have paid about 80% of the payment. So if I have to sell as is where, because it is about 80-90% completed, there's a buyer whom I have found who is ready to take under construction project. Can I take some tax benefits from this?
Can he take tax benefits on basically capital gains waiver? Are there any capital gains waivers available if he's selling property that is not yet unfinished property here and being delayed?
Kavita and Hidayat, a very interesting question again. Now, what the law says that, as I said, that when you sell one residential house and you invest in another residential house, then the capital gain that you earn from the sale of the first residential house, you are entitled to a kind of a tax break. Or in a situation that you sell any other asset other than the residential house, but invest in a residential house where you are not the owner of the residential house, then also you are entitled to the tax benefit or the capital gain is not taxable. But Hidayat, in your case, you are saying that the property is still under constructed, you paid the 80% and now you want to sell it to somebody else and you are receiving capital gain. Now, you are not exactly fitting in either, as I said, Code 554 or Code 554F, and therefore the capital gain exemption is not available. But the question would be that can you claim a benefit of a long-term capital gains taxation and pay the tax at the rate of IE called 20%? There are judicial precedents which supports the view that the right that you had in a property which you purchased, so that is a distinct and a separate right than the property. And if you are holding that right for a period of more than 3 years, then you can make a claim that this is a valuable right which is being transferred. A valuable right is a capital asset and held for more than 3 years. So therefore the capital gain is a long-term capital gain and therefore you pay tax on that capital gain at the rate of 20%.
Okay.
And that helps you to kind of reduce your capital gains tax. And if you invest that into a specified bond which are available for tax exemptions, and potentially you can make a claim to say that I have invested into certain infrastructure bond, like bonds issued by the National Housing Board or the what do you call it as the
capital gain bonds.
Yeah, Indian Railway bonds kind of.
Right.
So those capital gain bonds, then you are entitled to those exemptions.
Jayesh, also clear.
But certainly with a caveat that you will have to fight it out. Revenue authorities are not going to accept that proposition. So you will have to ready to face that music.
So if you're willing to face the music, then you
Right.
can do what Jayesh said, or else just pay the capital gains. But Jayesh, tell us this, when we are going into the budget, this is one of the demands that both industry and home buyers had.
Right.
The fact that projects are getting delayed sometimes because of approvals or for whatever reason.
Right.
And the home buyer is essentially not to blame.
Right.
Now, if they do want to, and this is from the other perspective that you cannot claim the income tax exemption,
Right,
etc.,
right.
until and unless you get possession of that project.
Right.
So, home buyers wanted some kind of a reprieve on that. What are the laws on that now, currently?
Right now, there are no reprieve, except that the budget has extended the period of for a person who has taken a loan and then constructed a house. Then there is a condition that the house should be completed within a period of 3 years. So that condition has been relaxed and extended to a period of 5 years, given that in the recent times the construction is getting delayed because of the approval. So that's the only limited window, I would say, that has been opened up. But in the situation which is being talked about, that situation is still not covered in that, and therefore that benefit is not available.
But IT exemption, of course, you've got an extended window of up to 5 years now in place of 3 years. We have Rishikesh Kale who's called in. Go on, Rishikesh, tell us what's your question.
I have purchased a flat 3 years back at the valuation of 58 lakhs.
Okay.
Now the rate at which it is been indexed and available in that local area is around 60 lakhs. But due to the dull market, I am not able to sell at that 60, whatever is the rate, 60 lakhs at that rate. But I am getting lesser than what I have purchased. In such cases, what will be the tax implications and how the losses what I have, that any exemption or any tax this thing is available for that?
You said indexation, so I'm assuming over here that it's long-term capital gains tax that you are looking at.
Right.
Yeah. Jayesh, very similar question. Bought at 58 lakhs, indexation cost bring it to 60 lakhs. He's getting lesser than 58 lakhs. Does he have to pay capital gains tax?
Again, you're saying that your consideration is less than 58 lakhs or less than 60 lakhs. I would say, assuming that your consideration is 55 lakhs. Your cost is 58, index cost is 60. So therefore, if you were to go by the computation mechanism, then you have clearly a capital loss of 5 lakhs. Now, you end up in a capital loss situation. The law provides that if you have capital loss, then you can carry over the long-term capital loss for the next 8 years. And if you earn any other long-term capital gain, then you can set it off that long-term capital gain against the long-term capital loss. So this is the only, I would say, benefit that is available to you. In the year of sale, certainly since you have a loss, you don't have to pay any tax.
Okay, so
But in the year of sale, you cannot set off the loss against any other income. Like if you have take an example, interest income, or if you have a salary income, or if you have any other business income, then that loss cannot be set off against that income in the year when you incur the loss.
Just hold on.
Right.
Just explain this for us.
Sure.
When you're saying you cannot set it off, like
Right.
say he sells it, say Rishikesh, actually sells it this
Right.
year, then what do you mean by you cannot set it off?
Like take an
He has to
example
pay
that,
IT income tax on this.
Okay, take an example that Rishikesh has a capital loss of 5 lakhs. He is also in the business and he has earned business income of say 25 lakhs. So if one were to look at pure arithmetic, then this minus 5 should have been set off against plus 25 and his taxable income should have been 20 if one were to go by the pure mathematics. But the law says that the loss under the head capital gain cannot be set off against any other income. So therefore, the income tax that he will have to pay would be on 25 lakhs and the 5 lakh loss is allowed to be carried forward for set off against capital gain that he will receive in the future years. Like take an example, he has got shares and he earns any capital gain on that, then that capital gain can be set off provided that capital gain is again a long-term capital gain.
And how many years does he have to actually carry forward this?
The law provides 8 years right now. carry
years.
forward. Yeah.
8 years you can carry forward the laws and use it to set it off against any other gain in any other asset class that you will make in the period of those 8 years. With that, it's a wrap on this edition of Property Hotline. Jayesh Kariya, thank you very much for coming in. Hope to see
My
more of
pleasure.
you on the show. And if you have any feedback or suggestions that you would like to share, any questions you want to ask, you know how to get in touch with us. Write in on email, on Facebook, on our website www.mbnow.in. You can tweet to me or simply call us live like all the other callers you saw tonight. Thank you very much for watching Property Hotline. Keep watching Magicbricks Now.
You can watch live TV on our website mbnow.in. Find us on Facebook at facebook.com/Magicbricks Now. And don't forget to click the like button. You can also follow us on Twitter at Magicbricks Now. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/Magicbricks Now.